Okay, let's shift focus now to the commodity space then. Manisha Gupta is joining in. Manisha, what is the one commodity you're tracking today?
I am absolutely keeping an eye on copper because there is a non-stop rally here. We're trading at a two-year highs on LME and it's at an all-time high in China yet again. Well, actually, when you look at the month of April, it has been string of all-time highs in sense of copper in Shanghai, and there have been various reasons for that as well. I'll come to that, but first on the price part itself. So on the week, we are looking at 2% of gains in case of copper prices. And when you look at this month itself, we are up by nearly 15% for copper. It's one of the better performing commodities when you look at across asset classes. Well, there are various reasons, as I said, for the gains here. One, the markets are anticipating a deficit in overall 2024. The first quarter numbers are yet to come, but the street is anticipating that that would also post a deficit here in those markets. China's smelters are cutting production by 10% because of the lower fees that they are getting. It's not profitable to them. The margins are absolutely absent, is the reason we are looking at production cuts from China. But what China is doing is that it is importing refined copper, and those refined copper imports are about 20% in 2024 so far. So while China is not producing, it's importing big numbers, and that has been supportive. The markets also are looking at pickup in global manufacturing numbers. There are supply disruption coming in from a couple of mines as well, including Cobre Mine in Panama, which suspended operations in the month of December and has continued to do that in the previous quarter as well. And as I was saying, there was improving demand from sectors like energy, consumption, AI, construction, EVs, data centers. Markets are also looking at more charging stations coming in. And then copper is primarily used as an electric cable wire, and that consumption also has been on the higher side. So various sectors doing very well, and copper demand is expected to be on the higher side. The CFTC data should come in on your screens as well, because that has been quite important. The net longs by money managers and hedge funds is the highest since October 2021. And the longs that they are holding is to the tune of 47,000 contracts right now. So this is quite on the higher side, and the markets do believe that there are fresh longs being added every week that we see, and that could be supportive. Now, already at around $98 to $9,900 a ton, we have seen smart gains happen in the month of April, but the viewpoint going forward is even more bullish. There was a very strong statement coming in from the BlackRock, which suggested that for the mines to be incentivized to go on for higher operations, the copper needs to be at $12,000 a ton. And that's exactly what various Wall Street brokerages and banks are talking about. They anticipate $10,000 of a price in this year. $10,800 a ton is an all-time high for copper that we saw in 2022. And $12,000 is a mark that they're putting out for the second year, first half itself. So very bullish cues continuing in case of copper.
Right, Manisha, thanks very much for that. So copper is on Manisha's mind, and it's on a lot of people's minds as well.